Welcome to Markets Now. I'm Michelle Rook with Arlan Suderman of StoneX. And we did see a mixed day in the livestock, grains to the plus side. In fact, a big up day in the grains, Arlan. And part of that seemed to be the lack of immediate threat of tariffs here on day one of the Trump administration.
Yeah, I think the market was eased a little bit. There's still talk of maybe 25% tariffs on Canada and Mexico by February 1st. That's still a real concern going forward, but for now, nothing immediate, and particularly for China. In fact, the talk with China really seemed quite comfortable between Trump and Xi Jinping. They had a call, an extended call last week that seemed to go very well. Now Trump is even talking about visiting China. He's taken a more favorable stance on TikTok. As far as China's part, there's been chatter unconfirmed chatter in the cash markets of them buying perhaps some U.S. corn. They've been buying some U.S. soybeans, even though they're priced about $1.20 higher than what Brazilian soybeans are. If you compare U.S. Gulf to Brazil, the soybeans would go to the reserve. Presumably, if they're buying corn, it would go to the reserve. Maybe a goodwill gesture saying maybe we can work out a deal perhaps to buy more U.S. commodities if you're kind to us on the tariffs on consumer goods coming to the United States, which is a much bigger market. And so there's a little bit more optimism there, and that supported corn and soybeans in trade.
What's your thought about a phase one trade deal or a phase two trade deal with China?
Well, I think that they could, because I think they have more to benefit on the consumer good export side than what it would cost them on the agricultural commodity import side. And so I think that we could see that, and I see both leaders moving in that direction toward amiable discussions. And so that's a positive, but I think it'll take some time to unfold. Brazil still has a big crop. I don't think this would be a huge monumental agreement that would really be trigger a big bull market in the U.S. commodities, but more of a strengthened demand here over the next few years to help hold up prices, keep them from going as low as what they otherwise might, and maybe give us some opportunities for periodic rallies. But then once Trump's gone, that trade agreement would probably disappear, and we'd be back into our oversupply situation again.
South American weather was also a bit of an issue too, wasn't it, for corn and soybeans as far as being supportive?
Yeah, it really was. As we saw the models underperform, the rains underperform what the models said, I should say, in Argentina and southern Brazil. And the bias going forward over the rest of the month is dry as well. Now, the models have been split, some calling for those rains to return in February, but confidence is pretty low. If they do, that'll really be good for the Argentine crop because they're very early in the growing season overall yet. Brazil, our team down there estimates we've lost about 2.4 million metric tons of production in the south already. That dryness stress now stretching into Mato Grosso do Sul. Our latest production survey at the first of the month, customer survey, put it at 171.4 million metric tons. We've offset some of those losses with the early yield results in Mato Grosso coming in better than expected. Overall, we're still looking at a crop that's 18 to 20 million metric tons larger than last year, so pretty sizable crop, but much of that big crop had already been priced in, so we're kind of getting a little bit of support from those lower yield estimates.
And wheat was putting in a little weather premium too, wasn't it?
Absolutely. The cold outperformed the models last night in particular. And so we saw that the cold temperatures got low enough from the Texas Panhandle to the eastern Midwest to do some damage. And the snow melt ahead of the cold was greater than anticipated. 2/3 of the Plains hard red winter wheat belt may have had varying levels of damage.
Right. And we had a lower dollar today in relationship to the lack of tariffs being announced. How much did that help push the grains?
I think it was a contributing factor. I don't think it was the stimulating factor for the strength in the grains, but it provided some additional tailwinds of support. And the dollar is weaker largely because of the lack of immediate tariff implementation and the fact that Trump talked a lot about cutting inflation. And so I think the market had been pricing in too high of inflation expectations, even though I've been more of an inflation hawk. I think they had more fears than maybe justified built into the market, into the currency market in particular. And so we saw some profit taking in the currency market today.
So, Arlan, we made new highs for the move in corn, soybeans, I think even in the wheat market here today. Do you think we can extend these gains, especially considering what we've seen in terms of, especially the reshuffling of the deck on the funds? Because I think they're now long in the soybeans. Will they keep pushing that or not?
Yeah, it was surprising in Friday's CFTC report to see them a little bit on the long side after favoring being short of late. And I think they show that they really want to be long in corn and sustain that for now. At least that's the current indications. And I think there's more friendliness toward corn longer term. I think there will be corrections, probably a sideways trading range in corn, but we've used up enough of the surplus that we could have periodic weather-related rallies from weather problems in different parts of the world. Soybeans, I think, is going to be very headline-driven. What's the latest headline on whether we have a trade agreement or don't have a trade agreement with China? And what does that mean? And I think that's the concern there. I'm still worried about the vulnerability of soybeans. I think more rallies need to be sold to be cautious there. On the wheat, this is all about weather. And freeze dam or winter kill damage on wheat cannot be confirmed until spring, the scope of it. And so these rallies usually end pretty quickly. And then you wait till spring to see if you can confirm any of the losses.
Yeah, no doubt. Let's talk about the livestock cattle market. At least live cattle futures ending a bit higher here today. And what, 3 weeks of record cash kind of pushing it, right?
Yeah, and it's just really been impressive how we've done that. Overall, the demand holding up even amidst strong imports. But when we look at this market, February and March tend to be our weak demand months. So the expectation is still there that we're going to top this thing out and that we're vulnerable to the downside. And that's what the market is now kind of hesitating with. Do we go higher? The cash market's been holding up. We're still expecting good kills this week. How long can we hold up is going to be the question. When you look at the weather, that's going to be taking some weight off of these animals as well, reducing production. That tends to provide some support in the near term. And I think that's helping undergird it. But there's a lot of caution in there for the cattle market.
No doubt. And the feeders did take a little break here today. We've been continuing to hit all-time highs there, but is that market maybe setting back in anticipation of this Mexican border reopening?
I think that's a factor, and I think the winter kill and reaching all the way down into Texas, going to burn back, at the very least, burn back a lot of foliage, is going to be a factor, reducing demand for feeder cattle. But I think the expectations of feeder cattle coming across the border is probably the larger one in the near term, and as well as this weather, just not real favorable right now for bringing in feeder cattle.
Right. And hogs started off higher and then reversed on the day. And how much of that is concern about Mexico? Because if we have tariffs on them, that is our number one customer, isn't it?
Yeah, we saw the outside markets react positively to the lack of tariff talk, and we kind of expected the hog market to do the same thing, which it kind of did, but then they started focusing on the stories, comments that Trump made that maybe we'll have those 25% tariffs February 1st. Mexico's our biggest customer of pork, in addition to all the corn, soybeans, meal, wheat, etc., that they buy from us. So I think the pork market really got concerned about that.
Yeah. All right. You saw all the executive orders from the president yesterday. Some of those had other agricultural implications. Were there any that you saw that might have immediate effects on the market other than what we talked about with tariffs?
I think for me, it was more the absence of any clarity on the liquid biofuels. You know, we still don't know what the Trump administration is going to do with the Inflation Reduction Act. And it's within that act that the subsidies are for our liquid biofuels, particularly our biomass biofuels that we have for biodiesel, renewable diesel. And that's a big question mark yet at this point. So that lack of support was noticeably absent. And we just don't know when it will rise on the Trump priority list with their full agenda that they have.
All right. Thanks so much. Arlan Suderman with StoneX. That is Markets Now.